This is the Bigger Pockets Podcast. This is episode number 90. My name is Charles Oglesby, also known as Top Millionaire, founder and the director of the Thai Capital Investment Club. We have over 330 members. We get about 10 inquiries a day. So if you're one of those people who said, hey, I sent you an email, I didn't get a response, we get 10 inquiries a day. So we're working on systemizing that. Actually, some really cool things going on. We are in the process of really leveling up the entire Thai Capital, everything, in the process of relocating the company out of California because this country sucks, or this state sucks. But great things that are going to happen for the community, which are only going to elevate the community higher, because that is really my goal and my calling. I feel like, I don't know, sometimes I feel like a civil rights leader, but hopefully the work that we're doing goes down in the history books because we're a solutions-oriented company, not a problem-oriented company. We have 6 rental properties, actually, I think 8. We have a lot of properties, and we're only going to do more in the process of looking at multifamily because the idea of buying one property at a time no longer appeals to me. The goal, I found this great property. It was an 8-unit. It would literally double our portfolio overnight. Put an offer on the property, was already had the offer under that was accepted. So the demand in our market is growing, unfortunately, but yeah, good things are happening. Looking to get into Thai Capital Trucking. So if you are interested in participating in that, we're going to be holding a informational meeting to discuss how we can make that trucking process work. And we're just going to be doing crazy stuff. So I thank you all for listening. Please leave us a rating or a review, preferably a 5-star review. Please leave comments. I respond to all the comments. Please share. Please subscribe. Please let people know what we're doing. It's a great work over here, changing the community, changing the culture. As always, you guys all know the purpose of this podcast is to share the stories of successful African-American investors and business owners, because we believe that business and investing are a team sport. We also believe that business and investing are the true keys to financial success and generational wealth. We want to share with you successful examples because they exist. Today, we have a brother named Brandon Thomas. He also goes by Yoshiii The Financial Plug on Twitter. He recently did a show with Corporate Coke and Smack. I feel like we share the same guests. We should just merge our shows and just call it the Corporate Coke and Capital Show. But welcome to the show, brother. Who are you and where are you from, man?
I'm Brandon Thomas, born and raised in Austin, Texas, man.
Is that where you are now?
Yes, sir.
Very cool. Very cool. So what do you do for a living?
So for a living, I am a licensed financial representative. So I do healthcare, long-term care, life insurance, funeral concierge services. I do group insurance for business owners. I'm also a credit specialist and agent with Nove Money, which is a Black-owned business based in Georgia.
Dope. We like Black-owned business around here. The
Yes,
whole
sir.
show is centered around Black-owned business. A lot of people don't realize that real estate is business. So the show really is about business. What's really cool about this brother Brandon is somebody had actually asked, they said, hey, you haven't done an insurance show. I was like, lies told on Twitter. We just did a financial show. We didn't do one. We did one like 20 episodes ago, but we're bringing back an insurance show for you guys because insurance is important. It's one of the linchpins in wealth building. We do so much in regards to building wealth, but a lot of people don't realize that in a lot of ways, insurance is the baseline of your wealth building strategy. The first question, though, I have, not the first, but kind of the first, is what does your Twitter name stand for? Yoshiii The Financial Plug. 3 I's,
Okay.
I think.
Yes, sir. So Yoshiii is really short for Yoshiii, which is Hebrew for either God has saved or God has healed. So I keep that name because I feel like God has healed me from, a poverty mindset, and, living and thinking broke, So I've been on a path to, just break a lot of generational curses and stuff like that. So, and then I keep the plug, the financial plug, because it's also like hip, so it catches people's eye, so.
Do you feel like names are important?
If you have a business, names are very important. If you're trying to brand yourself, if you're trying to put yourself out there, you got to have something that catches people, like Todd Millionaire, like that catches people. You know what I'm saying? So
Catches people.
Definitely something that you need to have,
Yeah.
So I think it's better than just putting out Brandon Thomas because, that's my name is very generic. You know what I'm saying?
Right.
So
there's a reason. People always ask why Top Millionaire, and there's a reason why Top Millionaire. It is for that reason. I can't just say Charles Oglesby. There's a million Charles Oglesbys out there.
Exactly.
I had to create a brand. It's kind of like that strategy if you've ever taken the Jay Morrison Academy, where he talks about like you have to announce your brand to the world. Some things along that line. And so Brandon Wigley always talks about how he made himself the real estate king. He said he gave himself the name Real Estate King. He didn't even own any property, but it attracted opportunities to him. And I think that I bring it up because it's not just in the names we give ourselves on social media. It's the names we give our children. Almost every African person has a name that has a meaning behind it. And what happens is people live up to that name. My name is Charles. And so like, I've always felt like I had to be regal. I had to be royal because it's Prince Charles, that kind of stuff.
That is true.
Names are so important, people. Don't give your kid no ratchet name, man. And not even just for the purpose of so he can get hired by some person. It's really just because it gives them something to live up to.
That is true.
So can you tell us why insurance is so important?
That's like the foundation of having a strong that's the strong point, of having a great foundation. Insurance that protects everything. A lot of people talk about, investing their money, whether you're investing in a business or whether you're investing in a house, you're always going to need some insurance. Because if you start a business and you're successful, you're cash flowing it, but you don't have health care, and now, you have to go to the emergency room for whatever reason, all your business money, it's having to go to your, your healthcare expenses, but if you had health insurance, you wouldn't be wasting that money.
Right. I feel like that's the reason why it is like the baseline of wealth, because it would suck to save up all this money, save, invest, do real estate, and then you have this huge catastrophe and all your resources gets wiped away.
Yes, sir.
And so the reason why I think insurance is important is I just read this book by Robert Kiyosaki. I forget the title, but he always says, like, would you drive a car without insurance? And they're like, no, I wouldn't drive a car without insurance. They're like, well, would you live life without health insurance? They're like, no, I wouldn't live life without health insurance. That's crazy. That's risky. And he says, like, why would you invest without insurance? And people are like, oh, I didn't know you could invest with insurance. And so that's when he kind of goes into a spiel of like options and all those different things. But life insurance is no different. Life insurance protects your assets. Exactly. We're all looking for asset protection in regards of, I need an LLC, I need a trust. Insurance protects your assets. Insurance is as important, if not more important, than the whole process of accumulating resources in the first place. A lot of us would be better off if our grandparents died with an insurance policy. Instead, they died and they just died. They're like, all right, bye, grandma.
I mean, you might be at the churches. They might be at the churches selling plates, to try to cover expenses and stuff like that. But
doing car washes.
I remember
setting up GoFundMes.
Exactly. That's what they're doing now, man. I hate GoFundMe. If I see GoFundMe, it has to be a very special reason for me to actually even pay attention to it. But for most of the time, if I see GoFundMe, I might block you on social media.
It's embarrassing. I've contributed to one. I had a friend who did it, but I was like, dang, that sucks that they had to resort to that. Like, I hope I don't put my family to that. That was the spark to make sure that I make sure my insurance affairs are in order. And it's actually very inexpensive. A lot of people think that it's like this big to do. Can you talk to us about some of the products and the costs that are associated with those products?
You're talking about life or health? Because health insurance is very expensive. Now, life insurance.
Which ones do you sell? Do you sell both?
I sell both, but I out of those two, it's definitely more life than it is health. Especially, now it's not open season right now. So
Let's talk about life insurance.
okay. Well, I mean, as far as life, I mean, life insurance really isn't expensive. It really depends on, age and health,
Right.
So, if you're a millennial anywhere between age, 21 and 36, whether you have a whole life or a term policy, it's really not that expensive. But like I said, it really depends on what you think expensive is.
Right. And so what does that look like? What does that number look like? Give me a ballpark number. Because
Uh,
I've seen some policies like whole life policies or even term policies for like $30.
yeah, term is cheap. You can find term for anywhere between like 15 and maybe like $40.
Mm.
The shorter your term, the cheaper it is. Um, for instance, if you're like a 25-year-old male and you want like a 10-year term, that might be like maybe $25, $20. As far as like the permanent policies goes, you might be looking to ballpark about maybe 40 or 50, which still is very inexpensive, but like I said, it really depends on how much money you're saved. So
The crazy part about it is the bang for the buck that you get.
exactly.
So yeah, you might be spending $400 a year, $40 times 12, 480,
Mhm.
but you are purchasing sometimes $250,000 worth of life insurance or maybe even more.
Yeah, even more.
So especially if you're like a man who has a family, I can't imagine a man that has a family that does not have life insurance. That just seems really irresponsible to me to to do that to your children.
Exactly. You'd be
Maybe
you'd be
people don't care.
surprised though.
You'd be surprised. How are you getting clients, man?
Um,
How do you find clients?
really big on social media, Facebook and Twitter. I give a lot of free value, on my page, and then I also, go into people's DMs and stuff like that. Um, like I mean, it's really just big social media. Like I really don't do any door knocking, anything like that. Everything is social media, man. Everything is social media.
How does your firm feel about that? Are they okay with that? Has the market kind of shifted to accepting that?
Well, I don't really have to mention my broker's name. I just
Mm,
I just mention myself and what I do. So
very smart.
yes, sir. I've never ever, people don't even know which brokerage I'm with. I don't.
That's dope.
It's because it's not even important. So
Yeah, and I was thinking about this because I used to work in financial services. I've had my Series 7, Series 66, life and health, all that good stuff. I used to work for Edward Jones, and then I worked for Chase Investment Services.
okay.
And what really sucked, like when I was working at the bank, that was dope. I had access to all their clients. It was the most amazing situation. And I appreciated it because I came from Edward Jones where you had to door knock all your clients. You literally went around the neighborhood with a piece of paper and you knocked on all the doors and said, "Hey, my name is Charles. I'm a new financial advisor in the neighborhood. I'm going to be opening a new office pretty soon. I would like to invite you out. What would be a good way to contact you?" And so you'd have to like get all the information, get their name, get their phone number, get their address just by looking at the address on the street.
Mhm.
And then that's how you create your deal list. And I was thinking, like, I get so many clients from social media and my podcast, all the content I put out. It's crazy how many clients I get. But I would never be able to do that if I was working at Edward Jones. One time when I was working at Edward Jones, Twitter was still around, and I tweeted that I was selling Build America bonds. And I got a letter, and they're like, "Hey, we saw your tweet, buddy. Take it down." I think the world is evolving. It's kind of almost unfair how much money you can make on the internet. The internet is so vast. It's just unlimited, which means there's unlimited income potential.
It's very powerful.
So, what is your favorite product?
Favorite life insurance product would definitely be Index Universal Life Insurance. That is a permanent product, but it's flexible on the death benefit, on the cash value, and then on your premium. So as far as the premium goes, you'd have a minimum that you'd have to pay to keep the policy from, to keep it intact. And then there's a maximum that you could pay to have the death benefit and cash value, um, build up faster, versus, whole life policies where you have a fixed interest rate, where you might get like maybe like 4 or 5%. These policies you get up to 15%, and then they have like a floor of like 0.75, which are ran off of market indexes like the S&P 500. So, which has actually been performing pretty good. I don't know how it performed 2018, but I know from 98 to 2017, it was about 8.66%. Well, no, I'm sorry, not just the S&P 500, the global index. So S&P 500, Euro Stock 50, and then the Hang Seng. So that global market has been doing 8.66 the past 20 years.
So break that down for the listeners who don't know what you're even talking about. Cash value, interest rate, how does that affect them?
Okay, so like a market index is just measuring like the performance of companies within the S&P. I mean, within the index. So the S&P 500 is gonna cap 500 companies. Euro stock I'm not familiar with because I live in America, and then the Hang Seng I'm not familiar with because I live out here in America. So that interest
the cash value, they pay their premiums. That premium goes into a separate account, and that money gets invested in the index fund, right?
Yes, sir. Yeah.
Interesting. And so if it was a term product, they don't have access to that. It's just you pay into it. Are there cash value term products out there?
There could be, but I'm not familiar with that.
We should create one of those.
I don't know. Those could be kind of risky because usually with the term policies, if you outlive that, they're not trying to give you any of your money back. You know what I'm saying?
Right, SOL there.
Yep, you're definitely.
And that's why they're cheaper. But I don't know if you feel this way, but I've always been a proponent of is buying term insurance under the premise that as I age, I'll accumulate more wealth. My house will be paid off. And so if I have a 10-year, 15-year, 20-year term policy, that's going to cover my lean years where I'm working, but I don't have as much wealth. Mm-hmm. And so then as that policy lapses and I'm older, I won't need health insurance in the first place. My children just inherit the business. They'll inherit whatever that's left. Mm-hmm. What's your take on that?
Well, I actually do have clients that do prefer that because that is like a way that I market my term. Me personally, I'm more of a proponent of, permanent insurance. I like the riders that come with, certain policies as far as like long-term care and stuff like that. But I'm 23 and I'm still coming up. So, somebody, older that might be already like well established and have, certain things paid for, I could get why,
right. And then also as you get older, it's tough to get whole life.
Yeah, it is.
It's more expensive.
Very expensive.
Yeah.
Very expensive.
If I was a potential client, a young 32-year-old man, no children, wife, what product would you sell me? I know you need more information, but let's just assume.
How much money are you saving every month? Just give me a number. On a bad month.
About $1,000.
Oh, definitely. Do you plan on having children?
Absolutely. I need children, man.
Oh, definitely. If you want to just invest a third of that money into an IUL, you'd be looking good on the cash value later on in life to where you'd be able to pay for their college cash. Well, not whole college, but maybe a year, cash, or maybe use that money to invest in something else. And then you also have that long-term care, and then, like I said, that death benefit rises too every year. So if you start off at 32, you might start off at 100,000. By the time you get to 67, you could be looking at, $500,000 or maybe even more, So it's just, I like that option for people just because like the different riders and the things that you can do with cash value as far as like either withdrawing or, taking out a loan against it, it's life insurance is very, it can be helpful in many ways, than just basic, a death benefit, which is good as well. You know what I'm saying? Right. Which is really great as well. I'm sorry, but yeah.
So you're saying like people can take out loans, what other things can they do with their life insurance besides just the death benefit? Because that's actually a new concept to me. Like I knew kind of, but I always assumed it was just like exclusive to the death benefit. So let's talk about that.
So of course you can take out tax advantage withdrawals, and then you can take out tax advantage loans as well. Now, the thing about the loans and the withdrawals is that you definitely have to have the equity in the policy already built up. So you can't just start your policy in a month and say, hey, I want to borrow $20,000. It doesn't work like that.
Mm-hmm.
You have to have that $20,000 built up. But the thing about those policies, when you take out a loan, they're not always meant to be paid back, because the interest is real low. But however, whenever you do pass away, they will take that out of your, death benefit. So like I said, in most cases, you don't really have to pay it back, but you do have to realize that they are going to get their money back, some way, at the end of the deal. So
how does your pitch sound when you first meet a client? Like, what do you say to them, and how do you kind of find out if they could potentially be a client for you?
The first thing I talk about is retirement. So whether it's an older person or whether it's a millennial, I get them to think about, 3 legs of retirement, think about Social Security, company pension, and then personal savings. I see what their goals are, and I ask them, because some people will say, well, hey, I already have insurance through my job. And then the next question I ask them is, hey, well, do you see yourself working here until you're 67? And 10 times out of 10 is, no, I don't see myself working here. And 10 times out of 10 is, well, I want to invest in my own business. I want to do this. I want to do that. And I'm like, well, okay, you're not going to be able to depend on the company pension because you don't see yourself working anywhere for 20 years, And then Social Security, I mean, people now, they aren't surviving off that, $1,200, $1,300 a month, So, I mean, in the future, I don't see that getting any brighter. And I believe they said that the Social Security fund might run out like 2034. That's what I think I heard. I'm not really sure though.
I haven't heard a hard date, but they've been kind of saying it's not going to last.
Yeah. So when I tell people stuff like that, I get them thinking about personal savings. And that's how I pitched the IUL to people.
IUL is what again?
The Index Universal Life. That's my favorite product because most of the people I talk to are people between the age of maybe 21 and maybe, I think the oldest gentleman I spoke to was maybe like 40, So it's usually black men about age 21 to 40. I mean, my market is really anybody, but my aim is definitely, the black males, definitely trying to bring that financial literacy there, because I don't just talk about insurance when I sit down with a person. I get to know them, talk a little bit about investing, emergency funds, debt management, stuff like that, before I start showing them different products and stuff like that. Nice. So.
What'd you get your degree in undergrad?
I didn't go to college at all.
Really?
Well, no, I'm lying. I went to college for a year and a semester. Mm-hmm. The first year I took seriously. The second year, I went and I got my, college refund, and then I stopped going to class. So, but I mean, in high school, my parents were definitely on me about having good grades. I was definitely raised, go to college, get a good job, and then you'll be all right. But at the point, it's like I knew I wanted to be successful, but I just couldn't see myself committing to like a major. Like I think I switched my major like 4 times, in one semester.
I respect that. What's so interesting about that whole committing to a major idea is I think I was explaining that to somebody once, is I was telling them like, our parents didn't necessarily pick a major. They just went to whoever was hiring.
Yeah.
So if this particular company was hiring, that's where they went. It wasn't just like, I'm 18 years old. What do I want to do when I'm 35? Oh, okay, that's it. And I think I was thinking about that too. I was talking to my sister. I was like, IT is hot. If you're in IT, if you're in tech, so it would make sense, instead of being so dead committed to whatever you're doing, go to Google. Go to Facebook. That's the Ford of our day. That's the major industry of our day. Go to Tesla and then learn the skills, have them train you, and then be making good money. Mm-hmm. It's completely flawed in what we've been kind of walked into in regards to picking a major, sticking with that major, and riding that major until the wheels fall off.
Yeah.
Very interesting.
I mean, I wouldn't say college is a scam. Yeah, I definitely wouldn't say that. I just feel like for myself, and for people that were thinking like me, that might have this thought, that if you just go to college, you'll just up and be successful. Like you definitely have to network. Like you just said, you definitely have to know like what market is hot. you know, me, I was just like, you know, I'm gonna go to college because I mean everybody else is doing it. You know, I don't want to just stay home and just be a, you know, a bum. You know, so and
Nice.
plus my dad was on me pretty heavy. My dad, he was real influential on me. So
So
it
what's
was.
your plan going forward? Do you plan on starting your own firm, or what's the goal in 5 years out?
Well, my goal right now is definitely, of course, like scaling the insurance that I do, and then the credit that I do. But that's more like self employment. But as far as passive income, just like part time, I'm learning like wholesaling. So my goal with that is I definitely want to start a real estate investment LLC. Start off wholesaling and then get into you know, buying holes and then flipping, you know, stuff like that, and hopefully save my money and get involved with some syndications and stuff like that. So that's really my 5 year goal. So, well, I mean, I'll be starting that business before 5 years. It'll
Mhm.
probably be next month, to be honest. So, because I'm already like getting my skills right and stuff like that. So it's
Mhm.
everything is in the works.
Are you taking a course, or are you just kind of learning on your own?
I actually bought some. I bought a coach, Brandon Jones. He actually just did a interview with you.
Right.
So I've been getting in touch with him, and then I have some other people that I'm talking to as well. And then of course, you know, reading up on a lot of stuff and, you know, watching, you know, different videos on YouTube and stuff like that. So
Nice. I think that's YouTube University. There's a lot of opportunity on YouTube University. I learned something today watching Juan Pablo. So a ton of information out there.
I think Juan Pablo, I think he has some houses in Austin because I saw like a picket sign. It said Juan Pablo, and I don't know the last name. I think it started with like a K or something like that. I'm not
I
sure.
don't. I'm pretty sure there's a lot of Juan Pablos in Texas, man.
Yeah, probably so. I'm pretty sure. Pretty sure.
Isn't Texas is kind of a Hispanic state? I know California is.
Yeah, Texas. I mean, it's getting there. It's getting there. I mean,
There's
especially
certain,
Austin,
actually, I'm pretty sure there's certain parts of Texas that are just like San Antonio. I
San
think that.
Antonio. Yeah, very
Yeah,
Hispanic. South Texas, very Hispanic. West Texas.
yeah. I don't think it was that Juan Pablo. I think it was another Juan Pablo.
I might go up there. I might go up there and see. Just check
Yeah.
it.
So, what piqued your interest in real estate?
I mean, definitely your podcast, and then reading Rich Dad Poor Dad. Just the, you know, the passive income it creates, the way you can run your business from really anywhere in the world. You know, like I said, the insurance is good. I definitely love helping people out and educating people more, but that's not something that I can do, you know, passively, you know, because it's, you know, everything is really commission based. So, and I definitely don't want to be self-employed until I'm 65. So I'm just using that money to, you know, invest into my own business. So,
What other books have you read on business and investing?
um, I read a little bit of Think and Grow Rich. Well, with that, does that count?
Yep, that counts.
Okay.
It's a business book.
But I haven't read. I have other books like Richest Man in Babylon, but I haven't got to it yet. Um,
That's the life. You know what's so crazy about that Richest Man in Babylon book is I read that book when I was young, like 19, 20. And then I like got a copy of it and I was reading through it and I came across the chapter on owning your own home. And it blew my mind because at 30, I see something different than I saw at 20. Like completely blew my mind. He was making points that I knew, but not points that I could like reference and say like, oh, I got this from here. I just knew it. And one of those points was that, I mean, the obvious things like, oh, lenders are more likely to give you a loan on your home, or the person who owns a home puts more effort behind their work. And so what I realized is a lot of people aren't getting beat because the person's better than them. They're getting beat because the person has all these different motivating factors that are actually pushing them to win.
mhm.
That's what marriage does for you. Marriage gets something inside of you that pushes you to win. And people don't realize that, like, you step into your full glory when you're connected to one woman. You step into your full glory when you're committed to raising your own children. You step into your full glory when you own your own home and you're not renting. You can't just call somebody and say, hey, the furnace is fixed, or the furnace has a problem, or the roof has a problem. Like, the more responsibility you take on, the bigger you become. So that book kind of, it shined a light on me that I knew, but until you've actually experienced all those different things at an old age, you can't even connect with it at that deep of a level. It's like you're just reading it for information at that point and not so much for context as it applies to your life. So I'm bringing up that point that, like, sometimes if you read a book when you're young, you need to reread it because there's some gems you probably missed that might change your life if you read it at an older age. What's your other books that you've read besides Rich Dad, Poor Dad, Richest Man in Babylon, Think and Grow Rich? Basically, I guess you like with the word rich in the title.
I've read some other books that haven't really been related to, like business and finance, but
we don't talk about those on this show, man. It's only business and finance books.
Business finance, yeah.
I'm just messing with you.
You're good. Like I said, Rich Dad Poor Dad, that's really been the biggest. I mean, I read like a lot of articles on like Investopedia and stuff like that, but I do. Yeah, I read more articles than. I mean, after I read Rich Dad Poor Dad, that pretty much sparked a lot in me. Not saying that I know everything, because I mean, of course I don't, and of course it's way more material out there to read. But I've just been really reading like a lot of just different, articles and stuff like that. Really, Investopedia, I'd be on like a lot. So, and then
what was your favorite part of Rich Dad Poor Dad?
When he was explaining the difference between like what middle class does with their money versus what rich people do with their money, and I saw that a lot, especially in the Black community. I mean, of course we weren't, I really didn't grow up. I didn't grow up poor, but I didn't grow up middle class. I grew up in a middle class area though, but just earning money and then spending it, making more money and then spending more money. Like I said, my parents taught me like real big on like, morals and values and stuff like that, respecting people, having good manners. But as far as like money goes, like that really wasn't brought up, it was always, of course, go to college and make more money, but, make more money because you want to buy the bigger car,
right,
bigger house, but investing, nah. Like my dad, like I said, my dad was really on me heavy, man, about going to college, but it was never like, hey, Brandon, I want you to go out there and own your own business,
Right.
So it's some things that I'll take, but it's some changes that I'll make a little bit once I have my own children.
That disconnect is really unfortunate. It's unfortunate that a lot of our parents don't see the value in owning things as much as they see the value in working for other people.
Mm-hmm.
I just don't. I don't know why. I try to explain it to them, and they're just like, I don't get it.
No, that's
my favorite. I don't have a favorite part of that book. That whole book is my favorite book. But one thing that comes to mind that I don't think I've ever talked about on this show is he said that one dad struggled to save a few dollars and the other dad created investments.
Mm-hmm.
And that statement is so profound because a lot of people do struggle to save a few dollars. But what I found is that if you create an investment, the investment does the saving for you. So we get tenants to pay us rent every single month. We have that rent in reserves. Every quarter we take a distribution, and that does the saving for me. One thing that I was listening to my Alexa skill this morning, and there's always that debate over like, oh, if you get a high tax refund, you're giving the government an interest-free loan. And he makes the point that if you look at the average tax refund, it's about $3,000.
Mm-hmm.
Break that down into the month, it's like $250. And he was saying, if you didn't give that to the government and instead you got $250, would you save it or would you find something to spend it on? And he said that most people would find something to spend it on. Mm-hmm. And then he went so far as to say that most people who get a large windfall from the government of like $3,000, they tend to do wise things with it. Meaning they'll pay down debt, they'll pay off credit cards, they'll buy something that they needed that they wouldn't have had, they would have otherwise put on a credit card. And so he was saying like, it kind of flipped the whole thinking on its head because I'm one of the tax refund bashers as well, but I'm not a tax refund basher. irresponsible use of your tax refund, Basher.
Mm-hmm.
And right now it's tax season. And so I always tell people, like, you're getting this huge windfall of money. You don't want to be the person, because it's one thing to get a tax refund because you paid too much. It's another because you didn't make enough. And a lot of people get tax refunds because they didn't make enough money. And so they get the earned income tax credit and they get the child tax credit, which are all refundable credits, would then allow them to get like this fat check. And so then they live like they're wealthy for like 2.5 weeks. And then they go back to being broke for the remaining 54 weeks of the year, which is just ridiculous.
Yeah,
it doesn't make any sense to strategically be broke so you can get $7,000. Why would you have over $60,000, $70,000, $80,000 so that you can get $7,000? Like, I guess people really don't like math. Why do you think that the African American community struggles with putting value on life insurance?
I think, I think our culture is very influenced from like popular culture. So popular culture doesn't really speak on the importance of, having strong, financial foundations. Everything is just spin, 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 So if, like I said, people really don't do, their, studies on insurance and then what insurance is done for people. If you look at business owners, like Walt Disney, started his business, from a cash value life insurance policy. And I forgot the founder of McDonald's, but
Ray Kroc. No, not Ray Kroc, or is it a different, the actual founders?
I think the founders. I forgot his name. But I know he used his cash value to for his business expenses, to pay his workers. Same thing with the owner at JCPenney's. So Master P, yeah, I think Master P, he used his grandfather's death benefit to start up No Limit, I believe. Right. So, yeah, like I said, people don't realize that. People don't think bigger than themselves. Everything is like YOLO. Everything is me right now. But all these YOLO folks, end up either having kids out of wedlock, or they do end up getting serious. But even though they do get serious, they still don't educate themselves on, insurance and stuff like that. So that's why I'm just, I'm doing my part to, give back, especially while people are still young. Because, like I said, this is very inexpensive. I feel like in the world we live in now, if you can afford to pay, over $100 a month on a phone bill, you can afford $50 for life insurance. If you can afford to pay, $150 on a cable bill, or, you can buy the newest release Jordans every month, or, whatever people like doing, whether it be a purse, jewelry, whatever it is. People, this is something that you can definitely afford, And like I tell people, of course, you want to build businesses and invest to pass on to your children, but, a $30 premium is the easiest way to give your children or grandchildren, $500,000. You know what I'm saying? Like it's pretty simple. It's pretty simple.
It's like we all complain about generational wealth, and you have the ability to give your child generational wealth just by making a small installment each month of between $30 and $50. And if you choose not to, then you can't complain when somebody else chooses to do that, and then they leave their child a bunch of money, and your child's over there looking at you upset. 100%. I completely agree. I think that that's one thing maybe we could start focusing on, is pushing people to start building those foundational blocks of wealth. It's one thing to say, hey, start a business. It's another to say, hey, invest in real estate. But we need to start really building the pyramid. When I used to work in insurance and I worked for a financial planning firm for a short stint, we actually would build the pyramid. And so you have like your base. The base of that pyramid is insurance. The next base was like retirement. The next base was like, I don't know. Can't even think of it, like a pension or something. You probably know that. Have you ever seen the pyramid?
Yeah, I do have a pyramid.
What's the pyramid? What's your pyramid consists of?
My pyramid goes protection, debt management, emergency fund, and then investing. Whether you be investing in a house, investing in, like I said, business, or, even a retirement product like an annuity or something like that. Always have that strong foundation first before you start, throwing like thousands at an investment,
Right.
So,
and that's so key. It's key for a lot of reasons. So the first thing I want to say, it's key because if you're investing, you're likely going to need reserves and an emergency fund to maintain that investment. A lot of people go into investing with no money down, no money at all.
Mm-hmm.
And as soon as the furnace or roof goes out, they have to sell the property, have to liquidate the property. However, one thing I will say, and this is something I kind of wanted to write a blog on, is that you become the person that you need to become as you do the things that you're doing. And so a lot of people, they're trying to become truck operators before they operate a truck. A lot of people, they're trying to become real estate investors before they invest in real estate. And I think it's backwards. It's tough because when you start going through conventional sources and conventional channels, they want you to be that person before, but it's kind of not possible. And so what I realized is before we invested in real estate, I wasn't in the financial position that I am in now, but because we invested in real estate, I am in that financial position. So I got to that point by doing the work. And another example is now that we're sitting on the edge of getting into trucking, I got to get my Thai Capital trucking polo. It's going to be dope.
Mm-hmm.
But like, if you're waiting to be a sophisticated truck driver and have everything lined up, your CDLs, all that stuff, your trucking authority, before you hop into the industry, you're likely going to never get in. And so what I do is I find the fast, cheap, and easy way to get in the door. Because if you are going to fail cheaply. You don't want to be the person that buys $100,000 truck and then they realize I don't really like trucking like that. But now you're upside down in the truck $40,000.
Mm-hmm.
Appreciate it to 60. So a lot of people don't want to do business how I do things, but it's working. So let's take what works instead of, because you can either and that's the thing, is like you can either do how I do, which is get started, get fancy, or you can do what most people do, which is I got this great idea and they just never do anything. They just go clock into the job because they just never manifest. Like, you got to get started. And now I can call on an 8-unit confidently. I called on an 8-unit today confidently. And I told them, hey, we own this. We're looking to level up into this. It's a way different conversation than, oh man, I'm trying to start getting real estate and I want to buy 8 units. You'd look like a fool. You got to get started doing stuff, and then you get fancy, and then people take you serious. And the more you do, the more sophisticated that you become, the easier deals start to get. I'm at a point now where it's easier to make more money. At first, it's tough to make money, and then it's easy to make a lot of money. End of my rant.
No,
Who's somebody that you look up to and why?
Man, I'm gonna say you, man. I'm gonna be real and say you, and I'm gonna tell you why. Oh, can you hear me?
I lost you. I don't know what happened.
Can you hear me now?
I can't hear you. What's interesting is it's probably going to, it probably recorded you talking. I just didn't hear it.
Okay. Can you hear me now?
Nope.
Hold up, let me see.
Nope.
Can you hear me now?
It does that every now and then. I don't know why.
Can you hear me now?
You might have to end it, and you might have to stop. You might have to stop and call back in or something.
Okay.
Ding dong. Say something.
We good?
I don't know where you went, man. I don't know why it's no audio. It's really weird.
You still can hear me?
Oh man, check your settings.
Let me see if I can get.
Microphone is at the bottom. You might want to check that.
Okay. Let me see. Start video.
That's not good.
Built-in output. Switch to phone audio.
Say something.
Hello? Can you hear me now?
Hello?
I can hear you. Can you hear me?
Nope.
No. Let me see. Let me get some.
I can't hear you.
Let me see if I can get some headphones real quick.
I got you back. I don't know what I did, but I hear you now.
You can hear me now?
Yep.
Okay. All right.
So before I go forward, what am I missing? Because you said you wanted to talk about some other things. I don't want to miss those things.
I think the only thing I said was just the difference between just different insurances, like different like term, whole life, and then universal life as well.
Cool. So let's break those down.
Okay. Just tell me when to come in.
Go ahead. I don't know. What should I say?
Oh, you can. You can like remix it, right, and chop it up and like
right.
edit it. Okay.
All right, here I go. So,
okay.
So before we got you on the show, you told me that there are some things you didn't get a chance to share on the Corporate Coke and Smack podcast, aka the Corporate Coke and Capital podcast, and let's talk about those things. So, you said you wanted to talk about the different types of insurance that's out there, which I think is very important. So let's break out those. You said there's universal, whole life, and term, I believe.
Yes, sir. Well, there's plenty. There's way more different types of life insurance, but those are the top three main ones that you'll familiarize yourself with. So, term is basically it can range anywhere between 1 to 30 years. Most term policies are non-renewable, meaning that if you outlive that term, you have to take another medical exam, and then they rate you at whatever age you are at the time, which means that your premiums will go up. And it also means that if you fail a medical exam, you're at risk for either being denied by the company or for them to jack your premiums up even more. But I mean, term it's more affordable. And I know with myself, if I sell my client a term policy, it can be converted into a permanent policy. And then with whole life is more, it's a little bit more expensive, but for some people it's still affordable. Whole life it has a fixed premium, a fixed death benefit, and then fixed cash value. So for example, you might have $200,000 death benefit. Out of that, $50,000 is cash value, and you're paying $70 a month. That'll never change. So the difference between that and universal life is the death benefit for universal is not fixed. So that means it'll start off at $100K. Every year it'll increase. Your cash value, every year it increases. There's no cap, and then it grows at a faster rate, at a higher rate versus whole life policies. And then your premiums aren't fixed, meaning that you have a minimum, you have a maximum, and you have a choice every month of how much you want to put into your policy. So for myself, if somebody's like, hey, I want a permanent policy, I'm like, well, hey, you might as well get a universal life versus a whole life because, you get more money, you get more bang for your buck. You know what I'm saying? So
Absolutely. One of the weirdest things about insurance to me is that it seems like they sell products that they shouldn't even sell. It's like if Universal gives you all the benefits of whole life, why even sell whole life?
Yeah, why even whole life? But some people don't want to take the risk. If you're like, hey, this whole life policy will guarantee you, 5%, on your money every year, versus, universal life where, your money's running off of the index, so it's like, hey, 1 year you can see 15%, the next year you might see 0.75, and then the next year you might see 0.75, and then the next year you might see 0.75, and then the next year you might see 15%. So it really depends on, somebody's, how much they're willing to risk. But with both policies, you can't lose any money, but some people just like that definite, safety of a whole life policy, so.
What does wealth mean to you?
Wealth, definitely, leaving this earth, passing on something to your children. If you pass away and you don't have anything to leave your children, you are a failure in life.
A failure. That's Bible right there. That's not even just Yoshi. That's Bible.
Yeah. If you leave the earth and you can't give your children something, your children's children something, you're not doing right. You
Right.
know, and then wealth is just it's more than, you know, more than just money too, but, you know, actually leaving them with, you know, good financial values, you know, because with life insurance, you know, you could have, you know, $1 million policy, you know, and die early, you know, and you know, you can leave your kids $1 million and then they go, you know, mess that money off, you know, at the strip club or buy Lamborghinis and stuff like that. So, you know, also leaving them a strong education too, you know,
I like it.
is very big.
I like it. I like it a lot. As you were saying that, I think that my definition as of this episode is I think the wealth is like impenetrable money.
Mm-hmm.
It's like you can never get rid of it. It's not like even just the ability to provide for like your heirs. Like when you have that level of impenetrable wealth, it's kind of a given.
Mm-hmm.
What was your what of you've I'm not sure how many episodes of the show you've heard. What was your favorite episode of the show? Who was your favorite guest?
Oh, that's hard. That's hard because I've been listening to your episodes since probably well since last year. Since last year. Let me see. Definitely Al Pickett was one of my favorite ones on here. Man, I forgot his name, but he has dreads too. Steph is dope.
That's
Um,
cool.
and then it was another guy that I had to look on my phone for his name. But he sounded like he was kind of Hispanic though a little bit.
Yeah, that was a good show, man. I love that show. He was raw.
Yeah, he was very raw. Yeah. That guy,
Yeah.
that guy.
I
So
like
those are some of my favorite episodes, man.
I like that. I like honesty, man. I don't like people who like they tell you because you know sometimes in the culture there's a lot of things that need to be said that most people won't say.
Mm-hmm.
He said those things. He was just like,
Yeah, I
man,
don't do that. Yeah.
and people need that. That's what they need. That's what dads do. Got a culture with no dads around here. But uh man, what's my other question? I don't even know. I know on the Corporate Coke and Smack show they talk about different things. They it's not as mine is kind of rigid. Theirs, I was listening to theirs, it's like they're just like chilling, having a good time.
Yeah. Shout out to those guys.
Yeah.
No, that was
What do you think sets apart successful business people from those who give up, fail, and never get started?
definitely your mindset. If you get up every day like, man, I got to get it, you know, I mean, me for myself, it's just like, man, I got to change my past family history. You know, I mean, some people aren't that motivated, you know, they just want to be average. They just like, oh, well, you know, they just want to be normal, I guess, you know, I guess they're happy with the bare minimum, you know, and real successful people aren't happy with just the bare minimum. You know, they want more out of life, you know, so.
I like it.
Yes, sir.
So where can people find out more about you and get in contact with you if they want to expand their insurance uh, portfolio, I guess is what you call it?
Okay, well, as far as the insurance goes, I'm only licensed in Texas and North Carolina. As far as the credit repair goes and the consultation with that, I service all 50 states. I'm on Twitter. My Twitter name is Mac from the 12. That's MacFromTha12. I'm also on Facebook too. My name is Brandon Thomas, which is very, very generic. But if you go in there under education, just type in Round Rock High School, like literally like a Round Rock High School, and then I'm a black guy with dreads. You'll definitely see me. But yeah, on those, I definitely do a lot of. I give a lot of free value, just more aspects of insurance and then credit. But I talk about other stuff as well, all aspects of personal finance on social media and stuff like that.
Dope. Very cool. Thank you for coming on the show, man.
Yes, sir. Oh, I want to say two things before I get off, and I want to make sure we record all this. The first thing I want to say is I need to look at you in your eyes and I need to apologize because back in 2017, when I don't know who I was following that kept retweeting you, but my mindset was different. I had a very victimized mindset to the point where I was just like, America's not for black people, all that successful business talk. I need to get on with all that. So when I used to see you on my timeline, I used to be like, man, who is this smiling house Negro on my timeline talking about all this black business stuff? So I need to apologize to you for that, because who would have knew that I was going to be on your show? And the second thing that I want to say is I'm actually thankful for your show, because if it wasn't for it, I would have not been doing the things that I'm doing today. You having your guests talk about Rich Dad Poor Dad made me go out and buy that book. And then Nipsey Hussle had dropped that Victory Lap. So those three things right there got my mind just changing, and I just been on a roll ever since February 2018. So
That's cool.
like I said, I want to thank you for that. So
that's cool, man. I
yes,
definitely, if I can help you succeed in any way, I want to do that. So, yeah, that means a lot. I appreciate that. That's really cool.
Yes, sir. Most definitely.
I guess this is episode number 90 of the Ty Capital Millionaire podcast. Thank you guys all for listening. If you are interested in joining I don't even know if I can really tell people that, because it could be considered an advertisement. So I'll just say that we are building the investment club for real estate and the investment club for stocks, doing some great things, looking to really level up in 2019, working on some joint ventures, working on some technology that's going to allow us to create some really, really cool things for the community. So looking forward to that, looking forward to the launch and the reveal of that. Also check out Blacker Pockets, that is on Instagram at Blacker Pockets. You can also find us on Instagram at Todd Investments. The website is www.capitaltodd.com. My name is Charles Oglesby, also known as Todd Millionaire, signing off. Cool.